Hi, everyone. Today we're talking about stocks versus collectibles in our next segment of Common Sense. Welcome to YCG, where we help your capital grow so you can achieve your financial goals. If that's something that interests you, then hit that subscribe button and the bell notification so that you don't miss a thing. I'm Will Kruger, and today I'm joined by Brian Yacktman and Elliott Savage. Welcome, guys.
Hey.
Hey.
All right, so we as human beings are curious individuals. We like to hunt and collect things, and we're talking about collectibles today. So I guess we should define it. What is a collectible, Brian?
Well, I mean, it's something that's collected, right? Something that's probably, hopefully, bought with the hope that it's worth more than what it was bought for in the future. And I think an easier way to define is maybe just describe common categories such as antiques or toys or coins, wine, comic books, stamps. Even these days, we're talking about NFTs.
Sure.
So, yeah.
I think that's what makes it such an interesting category, is just the variety of things that you can collect and to see what's out there. So why do people do this? One thing that I think of is just the enjoyment of going out and hunting for these collectibles. Perhaps it dates back to modern civilization where we were hunter-gatherers. So it's just the enjoyment of the hunt and finding those things. But what else do you think provides such an enticement to such a category, Elliott?
Yeah, well, I think there are a number of things, including the one you mentioned. I guess the first one that comes to another one that comes to mind for me that I think is important is that they serve as kind of social signals. And so if you think about a lot of the things that people collect, such as watches, cars, art, wine, handbags, they're things that people wear on their body or that they use when they entertain at home. And essentially, like they're signaling to people through the use of those things, both what their values are, what tribes they're a part of, what their status within that tribe is, and it helps people to more quickly filter in, filter in and filter out people who are good, going to be good team members, collaborators with them.
Yeah. Some other ideas that come to my mind are also just a function as a store of wealth, right? So people, just like they might buy gold or other types of things, that there's just the desire to diversify into another category to have a place to park their wealth. And especially, it's also could act as insurance just against government confiscation. There's certain circumstances that people throughout history, they've needed to have like a way to maybe store their wealth in a small, mobile, or hard to detect source of wealth. So whether that's for legitimate or illegitimate reasons, like organized crime or something. But so I'd say store of wealth, insurance, and then of course there's investment, right? Like just hoping to grow your wealth and purchasing power over time. You would buy a collectible hoping to maybe sell it for more in the future.
So I also think, you got to be careful that when you look at investing in such a category, that it doesn't become an overwhelming majority of your wealth, right? I mean, you hear of these billionaires investing in, expensive art, and actually that probably makes sense in those cases. But if you're still saving and building up your retirement, I think you're wanting to focus on building and accumulating wealth in assets that are cash producing, and we'll talk about that in just a minute. So let's look at the returns of these collectibles and this category. What have they been like?
Yeah.
Well,
so if you look at just this, if you look at this chart that we have up here, it shows a number of different collectibles, and I think one of the points is that if you do find one of these kind of enduring categories that has, pretty universal human appeal, then they can be, good stores of wealth and can even grow your wealth over time, at fast. So this chart shows, the real growth from 1900 to 2017 of a variety of different categories. And And you can see that, wine, stamps, violins have actually, grown your wealth at a couple percentage points, 2, 3, 4 percentage points per year in real terms after inflation for a long, long time. And I would just also make the note that we don't have the data for kind of 2018, 19, and 20, but it's not going to change the chart that much given the length of time we're talking about. But then I would make the point that you see the top bar right there, and that's global equities, which is our preferred. It's given historically at least the best returns. And we think that it allows for much better diversification and a whole host of other factors that enable it to be actually lower risk too.
I think the surprising category for me is stamps. I used to collect stamps as a kid, and makes me wonder where did that stamp collection go. But it's amazing to see the different types of categories and to see the performance. But yeah, clearly, like you said, global equities have far outperformed.
Do you still have those stamps, Will?
I think they're somewhere in the attic. It makes me want to go up there and go find them.
Yeah, and I collected baseball cards. I'm sure you guys did too. And
I collected Beanie Babies. No, no. But that I think brings up the point, right? That there's certain things like tulips or Beanie Babies or some categories that maybe haven't been as enduring. And so, to your original point, Elliott, if the category has been more of a universal appeal, those teams tend to be more enduring. If it's either a universal appeal or if there's even globally across time and globally desirable, and as well as if they, as you mentioned before, acting as maybe social signals of some sort, it seems to strengthen the probability that they'll be a more enduring category.
Yeah, but again, even that, some of it I think is just kind of luck. It's just these things become viral, and then because of network effects, they just grow to be this big belief network that just kind of propagates and self-perpetuates. But then other times they kind of surprisingly fall out of fashion. So,
yeah. One category that's not even on that list, but I think it's interesting, is handbags. Probably because they're a little bit more recent. But you think of especially the Birkin bag. If you look at Bag Hunter, they show that the Birkin bags compounded by 5% per year since 1980, which is far in excess of inflation. If you were to put that in an apples to apples with the chart we were just looking at before, which was in real terms, excluding inflation, there was about 3% inflation over that time. So that would mean a 2% real return in handbags. But that's an interesting thing, because most handbags, if it wasn't a collectible, the real cost of producing handbags has come down over time as they're produced, better, faster, cheaper, but not when it's been something like the Birkin bag, which is this collectible. But I think that dovetails nicely into an important point we'd make, which is we'd much rather own the business, the manufacturer of the collectible. In this case, we're speaking of Hermes, than the collectible itself. And that's because we prefer productive, cash-producing assets. Collectibles do not have cash flow. And so, in other words, the way I view it is, even if our investments, if the stock market were to shut down, our investments still have value as they produce goods and services to the world. Whereas if the market for the collectible you own shuts down or people stop having interest in it, there is no value unless there's a market for it. Now, having said that, of course, a business might also, the good or the service they're producing may become more obsolete over time, but they can hopefully take the cash flows from the current business and pivot and be more adaptable, which I think lowers the risk overall of the category.
Yeah, totally agree. And then I think another point to make is that we prefer to actually own sort of the manufacturer of the collectible, like you mentioned, like an Hermes. And one of the reasons for that is because of that ability to pivot, but it's also because sort of the two big risks with collectibles are that, number one, they're sort of more fad-like and just fall out of fashion over time. And then number two, it's that whoever owns that brand, so like in the Birkin bag's case, it's Hermes, you're really depending on them to continue to manufacture that scarcity, which is what gives that that product its social signaling high status social signaling ability. And so,
right, because if it's easy to obtain, it no longer acts as a good status filter.
Right,
exactly. If there's a plethora of them all over the place.
Right, yes. If something's ubiquitous and everyone has one, then it loses its magic as a collectible. And I think one of the best examples of this is, the Beanie Babies. So again, it's very unlikely in our view that it would have been sort of a long-term collectible anyway. It seemed very fad-like, but the proprietor who actually manufactured them and owned the rights to them, he hastened its death for sure by deciding to just manufacture more and more in more different varieties, and then even started at one point manufacturing them for as toys and Happy Meals at McDonald's, and so in that situation you had the guy who came up with the Beanie Baby idea. He ended up a billionaire because it took a while for, he was able to sell all these things and monetize that scarcity until it became ubiquitous and everyone realized, and then the prices collapsed. Whereas the collectors who put all their money into these Beanie Babies, they ended up with, no money. And then also, all these kind of worthless, reminders of all the money they'd lost in these stuffed animals. So,
right. Yep.
Pretty fascinating story there. Well, thank you for the conversation, you guys. For our viewers, tell us what you think. Write in the comments below what you collected as a kid, and check out our other videos. Thanks for watching.